Hey everyone, I'm Jeanette Barnard with Prime Future, and today we're excited to be joined by Fulcrum Global Capital and the partners from that fund. So gentlemen, please introduce yourselves.
Hi, I'm Dwayne Cantrell, a managing partner of Fulcrum Global Capital. We're a global food and ag focused fund out of located in Kansas City.
I am Kevin Lockett, and I've been involved with Dwayne and John as investment partners for the past 7 or 8 years.
My name is John Perriam, and I'm a partner and general counsel at Fulcrum Global Capital.
Awesome. Okay, so let's dig in here. So Kevin, talk to us about Fulcrum Global Capital, and especially what we want to know is how are you guys different from any other venture fund out there?
Yeah, so I mean, at a high level, we are a venture fund focused on the ag tech, the animal health sectors, and we're similar to many of the other firms that are out there, but I think we're also different in a couple of ways. Our thesis, which we can get into, is around global food production, but for us, what that really means is we're investing in food production, food safety, and food waste technologies, and that's both on the true tech side and on the biotech side. I think one of the differentiators between us and other funds is our investor base, our LP base. It's a pretty unique base made up mostly of what I'll call innovative producers. So actually true farmers, right? And so they cover about 13 or 14 states throughout the Midwest. They represent, several million head of swine, several million head of cattle. They have dairy operations as well, poultry operations, but then they're also involved in ag retailing, ag banking, just all different ag businesses throughout the supply chain. So we tend to think of ourselves as sort of the VC arm of the U.S. producer, if you will, and not necessarily just the U.S. producer, but really all producers. And so that brings, I think, a unique perspective from a Fulcrum viewpoint as we tend to look at deals. They serve as early trial sites. They serve as early customers at times. And I think it's a unique angle for us that increases deal flow and also gets some strategics interested in what it is that we're doing in terms of our portfolio companies.
Absolutely. So there's quite a bit there that I want to drill down on as we continue the conversation, but let's stop there and let's talk about what are your core investment theses and add a little bit of color for us of how you got there. How did you develop those investment theses?
Yeah, sure. I'll take that one. As Kevin mentioned, Dwayne, Kevin, and I all worked together previously. We actually invested early stage capital around sort of a broader thesis of bioscience. And when we spun off and formed our own firm, we took a look at that initial thesis and really dug into where the areas within that thesis that we thought had the most potential. And based on some global trends around population growth and projections regarding the quote unquote middle class globally, we really settled on global food production as the area within originally the bioscience investment thesis, a narrowed thesis around global food production that produced the best potential going forward. And Kevin talked about this a little bit, but for us, global food production really breaks down into three areas: agriculture, animal health, and then on the production side, no longer on the companion animal side, and then ag tech, which is sometimes a standalone, but obviously can bleed through those other two. So really three very broad industries that we're investing into. And then there's three types of technologies within each one of those that we're interested in: how to increase production, how to reduce waste, and then how to increase safety and transparency through the food system. So that's how we got it, is sort of we were doing something broader, and then we kept seeing these things that had bigger and bigger global applicability. As Dwayne says all the times, there's three things that if you're lucky you do every single day, and that's eat breakfast, lunch, and dinner, and there are more people that are doing it all the time. So that's how we got to where we are.
I like that saying, and that's a great summary. So let's drill down. So most of our Prime Future readers and listeners are going to be much more focused on the animal agriculture side of the industry. So let's drill down into that animal health landscape specifically. Talk to us about what you see. Where's the opportunity? Where are the big trends? What's happening there?
Well, I'll build on John and Kevin's comments to that question, Jeanette. And so as both Kevin and John have said, we do look at ag tech and animal health but really from a global food point of view. So we're not focused on companion animal technologies, for example. It is about production animals and proteins. And as again, John referred to, a growing population, as most forecasts say, we have 10 billion people in the next 30 years who wake up, as we just said, every day looking to one thing common: eat 3 times a day if they can. And so it's somewhat immune to global trends and economies, et cetera, that there are just certain factors around global food that are relevant. They were 2 years ago, they are today, and they'll be even more so going forward, as we need to increase the protein levels globally by about 70%, most projections would say, over the next 20 to 30 years. So as we look at the animal health industry and animal production, we are very much production focused, as I said a moment ago. But that includes production beef as well as dairy. It includes swine and poultry. It would also include aquaculture as a focus as well, certainly, but also even alternative protein sources. So those alternative proteins may be inputs to production animal feed, for example, but alternative proteins has to be an area that we include in that protein and animal focus. Secondly, I think we look at this from a kind of pure economics perspective, and then that if we aren't focused on how to increase the returns or outcomes for the producer, then we're probably failing to focus on the right technologies. So in a very simple way, you improve outcomes because you're either reducing input cost or you're increasing yield. And so we try to narrow things down and look at things from a very simple kind of economic model, if you will. And those inputs could be feed, for example. So how do you increase feed conversion rate? Or how do you reduce time that you are feeding so that you get to market weight more rapidly? It could be labor costs it's an input cost that we're looking for. How do you automate certain aspects of the animal health industry and production animal industry, whether it be in herd monitoring or management type of systems that replace the human labor force, or could be in areas of more efficient and effective medication cost, with a less dependency on antibiotics and looking for more biological solutions. But on the yield side, we may look at things that are kind of, how do you lower morbidity or mortality rates? Or in other words, how do you increase the survivability of herds through drought resistant feeds or other types of things that help to increase the survivability rate? And so those, as Kevin said, can fall into kind of biotech, or they can fall into technology solutions. And so we have a keen interest, I think, around the biome, whether it be gut biome or digestive health, or the nasal biome for things like bovine respiratory disease. But I think as we break down biotech, we think about things from disease management. That's from early detection, treatment alternatives, delivery systems, and carrier technologies like nanotechnologies. On the feed conversion rate, it's looking at additives to feed, whether it be increasing the protein, decreasing the input that goes into production, or reducing methane emissions, for example, by addressing issues within the gut biome itself. And finally, reproduction technologies, whether that's gender determination, particularly in areas like dairy, missed breeding cycles, which is a huge factor in lost opportunities and outcomes for producers, herd loss, as we've talked about. And then on the animal tech side, it's things like herd management and virtual fencing, or traceability and transparency that John referred to as an important part of consumer-driven demands today, but also being able to capture kind of biometric information for traceability through the entire life cycle of animals to the market as well. And then I think there's a huge demand and need going forward for capturing data and aggregated data in the agriculture sector. I think the last thing I would say, Jeanette, is that we really, I think, bring a great deal of focus and attention to efficiency versus effectiveness in technologies. And so I think too many times technologies are developed sometimes coastally, that have a great focus on efficiency. And we're used to that in phone apps, et cetera, is going to make you more efficient. But the producer in the US is kind of up at the crack of dawn and going to bed when the sun sets. Efficiency is less of a concern, I think, sometimes than effectiveness. Did you improve my outcomes? Did you reduce my cost? And so I think technologies that are focused around effectiveness for outcome-based solutions is an area that we are have a great deal of attention and focus on.
That's awesome. And a couple of things come to mind. One is all of the different sub-segments within animal health where there are opportunities and gaps in the market today that need to be filled. But then number two is what you just described of kind of that merging of digital and how that then interacts with, let's just call it more the biotech side, right? Of how do we use digital technology and big data and bring the precision element to microbiome management, for example, as we look at replacing antibiotics and livestock production. So it's interesting to hear how those dynamics all play together and that you guys are looking at the whole broad space.
Because I think we have to look at it holistically, because there's not going to be any one solution that's going to bring all the benefit. And I think, as we were just talking earlier today at a partner meeting, that you look at the discoveries in nanotechnology development right now, or phage development, and so there's so many kind of subsets of delivery mechanisms in the biotech space, and biostimulants and biofertilizers on the ag side. And so the world is evolving and fairly quickly. And I think very much consumer driven kind of demands in the food space for many of the things that we are indeed looking for. So we have to balance what the consumer is wanting and demanding and looking for, and then what's effective for the producer. And unless it's effective for the producer, it's not going to get the adoption and the rapid expansion in the marketplace that I think every new company, new technology is looking for.
Absolutely. That's a great point. So let's kind of go back to something that Kevin said at the beginning around, you guys work with your LPs, you have a different investor base, and then you work with them a little bit differently than maybe other venture funds do. So talk about, as you think about the animal health segment of your portfolio, how does it play out? How do you work with producers? Your producer investors, and what does that look like?
So it's evolving, I'll say, but there are some things that we do, I think, that give, let's call it early stage portfolio companies, and either early stage companies that aren't portfolio companies yet, sometimes access to a population of people that do this for a living every single day and are on the innovative side and are really looking for solutions. And so a great example might be, we'll take a portfolio company, and as we're making the investment, if I go all the way back to the beginning, me, Dwayne, and John, will spend some time with those particular LPs that we have that are very specific in whatever the application or the technology might be that we're looking at. And we'll try to better understand sort of the pain points. We really want to understand the integration of the technology into their existing practices as they perform them today, to make sure that it's a seamless sort of transition, or at least understand from the founder how they're thinking about that. We really dig in, as Dwayne talked about early on, into what's the ROI. If we can't get to the ROI to the producer very, very quickly, it's an easy sort of pass for us on that opportunity. And so we'll use it to gather pain points after we go through our diligence and we ultimately make decisions. With portfolio companies, then there's obviously a connection between anybody we've made an investment into and any of those LPs that we have that have operations that align with their particular technology. And so sometimes that could work out to be a trial site. Sometimes that could work out to be early customers. Just kind of depends on the development of the company itself. One of the things that we've been toying with a little bit has been, how do we possibly start to connect our LP base is very, very innovative in terms of their operations, even with opportunities that are earlier in our pipeline, or maybe we aren't participating in from an investment perspective for a particular reason, but still may be a good solution for some of the pain points that they have. And so the three of us just recently had a meeting where we brought together about 6 or 7 of our producers, and we had 3 or 4 companies that we're not even invested in just yet, spend about 20 minutes with each of those groups. And what we did it for was, from a selfish perspective, we wanted feedback from our producers in terms of the actual application of this technology. But on the flip side, what it did is it exposed those technologies to our LPs. So we provided some value back to our LPs, but then on the flip side, we provided incredible value back to those early stage companies that are trying to better understand what the market looks like. And so at the recent meeting that we just had with our producers, and we had those 4 companies, well over a couple million head of cattle that were represented. And I think 2, if not 3 of those technologies were in the cattle space. And so for them, it's a unique, interesting way to quickly get feedback on a very large subset of the cattle industry in terms of cost, ROI, how it needs to integrate with existing operations and so forth. And so we believe that puts us again in that unique perspective where early stage companies will hopefully flock towards us because of some of the value that we provide, even if we happen to not become an investor. We also believe that whenever we get around to Fund 2, that's an attractive piece, I think, to potential LPs that are producers to be able to say, hey, here's a group that can help me be on the innovative side, but man, they're going to actually open up the door for me to other technologies, whether they make an investment or not, that can actually solve some pain points that I have on my farm as well. So we think it puts us in a very unique position. While we see a lot of other VCs that have, let's call it, a lot of big institutional investors, or sometimes just some high net worth, we, just like entrepreneurs are looking for money that brings additional value, we're looking for investors, LPs that bring additional value. And I think we're very blessed to land with the LP base that we had. And I think as we move into Fund 2 at some point, we'll look to increase that LP base with that same type of value.
And it's so interesting to hear that just you're adding value throughout the entire ecosystem around Fulcrum, of you're creating value for founders, again, whether or not you're investing in them, and then you're creating value for your LPs because they're getting exposure. So really an interesting model there.
Yeah, I mean, I think, and again, some of this we had planned out, some of this we've just stumbled into. But I think what we realize is that when you can sort of see yourself as the linchpin between all of those different pieces, then hopefully you're viewed in the ecosystem as a necessity to engage with, as opposed to a nice to have. And I think from our perspective, if we can have deals constantly flowing through the door because of the value we can provide to founders, if we can have LPs that are very, very interested whenever it is that we're out fundraising for our funds, engaged because they like the value that we provide. I mean, you got to remember, this whole production space, it's about being in a trusted network, right? And so when you talk about implementation of or adoption of technology, they're going to their trusted advisors, whether it's an agronomist or whoever it may be. And so if we can be a part of that trusted network from an innovation perspective, then we see ourselves as sort of one of the linchpins that is around innovation, early stage adoption, new technologies, and returning capital to investors that makes us an attractive piece to anyone, regardless of where they are in the ecosystem.
Absolutely. So let's follow up on that phrase you used earlier of being the venture arm for the producer. You just described some of those benefits a little bit, but let's expand on that and describe what are the key benefits that a producer gets by engaging with Fulcrum, especially for those producers that they're not comfortable in this early stage innovation game. It's just not the space that they've played in.
Well, let me start with that. And I think each of us probably can add some color to it. And so first of all, I would say, Jeanette, that we, Fulcrum, look at that we're not the story. It is our portfolio companies that we like to showcase, and 2, that it is our LPs that we are trying to not just provide a financial return, but truly help them, and I mean a financial return on their investment, but a financial return on their business, on their operations. And if we can accomplish those 2 things, that it's about our portfolio companies succeeding, and it provides value beyond financial returns to our producers, then I think we've accomplished what we're looking for. But I would say this as a starting point is that one of the things that we discovered in the process of this fund is that, you know, as we began to see who we connected, our story connected with the most, it was clearly production operations in the ag space, these producers, and meaningful. I mean, the largest provider of beef to Tyson, the largest provider of beef to National Beef. And so these are large ag producers. But when you're living in rural Kansas, Nebraska, Texas, Oklahoma, whatever, you're not seeing a whole lot of venture funds knocking on your door, right? And so one of the things I think we hit on very quickly was, you know, we're providing another level of opportunity, which is, you know, an investment level opportunity in venture capital that oftentimes gets kind of isolated or segregated to kind of urban areas. And so certainly I think that part of the benefit beyond the opportunity to invest in an area that they understand. We've shared this story a number of times, but sitting at a conference, investor conference, when we're raising the fund, talking to an investor who was very, very interested in ag and food, but wondered why we were located in Kansas City. And I had to explain where agriculture happened in this country and where food is produced. And it's not just what you buy at your grocery store. It actually has to get produced someplace prior to that. And the response was, well, that's awfully, I understand it, but that's awfully inconvenient, meaning that we were located in Kansas City. Mm-hmm. I think when you are located in the heart of the animal health corridor, in the heart of agriculture, it's a story that's well understood. So I think I'd start with, and then ask John and Kevin to add too. I think one of the benefits is it's just an opportunity to invest in an area that they get and they understand, and they instantly understand the story and what we're trying to accomplish, which is to provide them solutions that help them become better operators with better outcomes. And in addition to that, the opportunity to get good returns on a targeted area like global food that we believe has the opportunity to provide great venture kind of returns.
Yeah, I'm not sure there's a whole lot that I would probably add to that, other than you know, I think we sort of provide a solution to all of the producers that are out there that have differing needs, right? So there's some that are very far to the right on the innovative side, and they're super interested in what's out there. So we become a source for new technologies. There's some who just say, hey, your story fits. You get it. Dwayne mentioned the whole animal health corridor. I mean, when you talk about the story of, hey, we're looking at ag and animal health technologies, we sit in the animal health corridor. And so within a 5-hour radius or 3-hour radius of Kansas City, we've got two of sort of really the world's leading academic institutions when you talk about animal health, with K-State at one end, and then probably a little more of a companion focus, but Missouri at the other end. And then you talk about, you know, 56% of sort of the world's GDP has representation here within, again, 2.5 hours west or east of Kansas City. And you talk about the relationships that we have and are able to build with the big strategics that are in the animal. I mean, that whole story, I think, fits really well with the actual producer as well. So I think, you know, each producer is different and they all have different needs and different desires, but I think there's a piece of our story that seems to fit with them regardless of what their need is. And I think that ultimately makes us attractive to the potential producers that are out there as well.
Just, well, I'm sorry, one more point there. So as Kevin mentioned, that kind of the concentration of global animal health companies and the research universities. You also have in Manhattan, Kansas, just a couple hour and a half west of Kansas City, the National Bioagrodefense Facility. So what the CDC is to human health, NBAF is and will be to the animal health. This will be the United States premier animal research and animal health institution. And we'll start opening up and transferring technologies next year. And so this is bringing in scientists and companies and startups from all over the globe to be near that level of kind of research and spin out technologies. And so also the most recent transfer of several divisions of the USDA to Kansas City, but also already in Manhattan, Kansas, also just continues to reinforce that the concentration, not just for the United States, but North America and the globe.
I think Dwayne and Kevin pretty much covered it. The only thing just going back to your original question, Jeanette, about, why participate in something like FGC if you're a producer. I mean, ag and food production in general are both different than traditional technology. And this is proven just by the fact that it's so far behind other industries. It has yet to truly be disruptive. It's not because the markets aren't big. It's not because the need isn't there. It's because ag and food production are different. What we're trying to build with FGC is a fund and an operation that focuses on what the true drivers to adoption of innovative technology are. And as Dwayne said, it can be boiled down to profit. How to fit within a producer's process, and how to actually solve pain points, not just become more efficient. So ultimately, that's what we're trying to build with FGC, and what we hope to be able to bring to the producers.
That's awesome. And it's just interesting too, as I think about, okay, so a producer that might be seeking access to venture type returns on an investment, that's all fine and well. But when you think especially about these large producers where, if that technology truly solves those problems, a 3% increase in XYZ metric could easily over a year be a larger return than what they would have gotten from the pure return on the investment from a venture perspective. So it's interesting, the application there from both angles.
And what you just pointed out, Jeanette, is the very reason we started trying to figure out what are ways that we can engage our investor base, even with technologies that we may not make an investment in.
Yep.
Makes sense. Okay, so I'm going to ask this next question, and really asking it specifically in an ag context, because I think sometimes maybe ag is a little bit different, as you said, John, from other industries. So when is venture capital the right tool to scale a startup? And again, specifically within ag?
Maybe I'll start with that. I think, well, first and foremost, I think venture is good when you've got a founder who has an alignment in beliefs with venture capital, which is, I am trying to build something that is disruptive and will scale very, very quickly. And I am looking to have a liquidity event in a certain range of time that seems to make sense. I mean, anytime we make an investment, one of the first things we're looking for is alignment of interest. And a big part of that alignment of interest is making sure that just like we see a certain life cycle to this company or this technology, making sure that aligns very well with what the founder is anticipating and looking for and expecting. So from our perspective, venture, I think, is a great tool when you've got an incredible technology that also fits some of the other characteristics that Dwayne and John have talked about before, where the ROI is very straightforward to it. Let's say if the consumer is to be a producer, it's very straightforward. It easily integrates with their existing practices, but it really has the opportunity to scale quite quickly. And it's solving, in our view, a massive problem. I mean, Dwayne and John and I always talk about there are problems, but we're looking for solutions to billion-dollar problems. And that's one of the reasons that the name is Fulcrum Global Capital. We believe that not only are these problems global, right? Ag, animal health, these are global activities everywhere. And so our view is that solutions are global. And so it doesn't mean that the solutions are only going to take place, let's say, in our backyard or only in the US or even only in North America. And so as a result, today we've got, I think, 5 investments that are in the U.S. We've got one that's up in Canada, one in Israel, one that's out in the EU. And so again, these solutions are going to come from everywhere. So from our perspective, it's really about alignment and making sure that not only us, not only the founder, but other potential syndicate investors are seeing things the same way. And I think one of the pieces that's really intriguing that we may get into is just really when you talk about in the animal health space, the exit market is sort of being defined as we speak. And so there's really not it's not like tech where you can point to and say, hey, if you hit these metrics, then you have a chance to do this kind of a multiple. I think it's all being defined. And one of the challenges when you talk about animal health is, especially anytime you get to the health related side, when you get on the drug side or the vaccine side, I mean, sometimes those are really, really long runways that just in general don't typically match up with the venture timeline. And so understanding those pieces and figuring out how that all works together, I think is ultimately going to start to define what levels of risk capital are going to be available for many of these early animal health technologies, and what parts of animal health, as Dwayne laid them out earlier, are going to really start to be more venture backable than maybe some others that the timeline is just simply too long, or the amount of risk capital that's got to go in over that timeline just seems to be quite extensive.
Absolutely. So, okay, let's take that one step further then. So what's true of the companies that are a good candidate for a Fulcrum investment?
I'll start. Part of it's just going to be a cliche just to make sure we get this part knocked out. But the management team has got to be really top notch from our perspective. Our experience in this area is it's pretty easy to get focused on some transformative technology. But unless you have a true team behind it that knows how to execute, we start to lose interest pretty quickly, because it's not easy, even if you have the best technology out there. So the very first thing that we look at and that we focus on, I think, is the management team.
I'd say from again, some of these things are going to be repetitive from previous questions and answers, but we want to see things that are at least have a mindset around a producer's point of view. In other words, is it solving a problem for a producer, as opposed to, wow, this is a really cool idea? You know, one of the reasons why we have our advisors, our investors, because, you know, we use the term, you know, they've signed the front of a check, not just the back of a check. They have to make technologies work, because they've got to make payroll next week or next month or whatever. So when we see technologies that really come from a producer's mentality, that they're effective, they're reducing cost or improving outcomes, that they're big problems, they're billion-dollar problems, as Kevin said, but they come from a producer's point of view. And reason why we don't necessarily use academics as advisors, because what works in a lab oftentimes doesn't work in the marketplace or in the feedlot or in the field. And so I think we also look very heavily at, that's why we engage, as Kevin articulated earlier, why we engage our producers throughout the process, is to really understand, is this solving a problem? And is it, you know, one of our producers in that panel that we had a couple of weeks ago, Kevin referred to, just said, look, it's just got to be a no-brainer. And what he meant by that, we followed up, was operationally a no-brainer. I don't have to change my systems process. I don't have to hold that cow in the chute longer because I got to do something, because we know it stresses the cow. So there's things that become no-brainers operationally. You're not adding processes, you're integrating into processes. Secondly, that it has to be a no-brainer financially. It's clear when I make this investment, I'm going to get a return. And so this kind of producer's mentality, I think, is something we're constantly looking at in the decisions about which companies to invest in.
Yeah, and the last piece that I'll add, I'll take maybe a different perspective, is we are very thoughtful about the investment syndicates that we're building when we make these investments. Hopefully, what you've heard throughout this interview is that we're very, very focused on how Fulcrum can get out of the way, and how we can be very helpful to others that are in the ecosystem, or in particular to our portfolio companies once we've made investments. We are really sensitive to trying to identify other investment partners that see things the same way, because I guess our belief is one of the hardest things to do is to found a company, scale it, and then exit a company, regardless of the field that you're in. You add an additional layer on top of that, and you're doing disruption in an industry that hasn't seen massive disruption for 30, 40 years. You add another layer on top of that, which is not tons of risk capital when you start really get into the animal health sector. And before you know it, you've got so many layers that are ultimately stacking up against you. Our belief is that if we have other firms like us that are all circled around the portfolio company that we've made an investment in, then now this portfolio company, this founder, they have resources that they can tap into that are beyond just their internal team. They can tap into maybe areas where Fulcrum provides value, where a couple of other investors may provide value. So we don't always get it right. We don't always get it the way we want to, but man, we are very thoughtful about who else we put around the table, so that it's not just money, but it's really about the additional types of value that are synergistic that can really help advance those companies.
That was really a mic drop response right there. I mean, it is such a complex situation and a complex challenge for those founders trying to bring solutions to market. So then as you add all of these other layers of support around there to increase the probability that we're accelerating innovation in this space. I mean, I think that's just huge impact. So last question here. So this year, little bit of a dumpster fire in general, 2020. I think most of us would describe it that way. So talk to us about what did you see in 2020 that makes you optimistic about the ag industry and about where the industry is headed?
Well, let me start there. And so I'll start with what's not changed in 2020. And because I think that's really important. And John referenced this earlier, we have 5 billion people on the earth. They wake up every day wanting to eat, hopefully 3 times a day. That population is growing and growing at a rate that's going to reach, short of some massive pandemic, that's going to reach 10 billion people. And with urbanization, rising middle classes, et cetera, that the demand for protein particularly is not going to change. It's going to come in different forms, but it needs to increase by 70% or something close to that. So that's what's unchanged. What I think that we all focus on in this year, 2020, it's been that dumpster fire, as you referred to, is that certainly COVID has had a massive impact on the economy and massive impact on the way we live our lives and so many other things. But what it's actually done as it relates to agriculture, animal, ag tech, et cetera, has brought a huge spotlight on it and an attention to that, to food, because we've all seen the food shortages. We've seen the disruption in food and meat processing plants. We've seen disruptions in supply chains. We've seen shortages. So food has actually become, at least in this part of the world, we've always taken for granted. Suddenly, we're not taking food for granted anymore like we once did. And that's never been the case in much of the world. So as you think about what 2020 has done, it's brought a great deal of attention around those areas that we talk about, ag tech, and animal health, across those 3 questions of, does it increase yield or production, therefore supply? Does it reduce waste of food, which we've seen continue to increase? And does it improve the safety or security of food, therefore traceability and transparency in our food supply chains, as I think the confidence level of consumers has often dropped about food safety and security. So for us, I'd say that it's actually been brought a heightened awareness, a heightened interest and focus around global food. One interesting point, maybe, Jeanette, is that as a result of us remaining very active in 2020, we've looked at over 325 deals so far this year. So we're looking at a deal a day, if you will, think of it that way. And so to make 2, 3, 4, this case this year, probably 5 investments. So it's actually increased the level of activity, increased the net level of focus. To Kevin's point, it's increased the number of funds who maybe weren't in ag investing in the past, suddenly wanting to syndicate and get into food-related, ag-related technologies and investments, and looking for people who are maybe more deeply rooted, like Fulcrum, in the ag producer space. So to me, that's how I look at 2020. It's nothing any of us would ever want to have again, or to wish, but it's actually, I think, increased the focus and attention and the awareness of the global food challenge that we have.
Excellent. Well, that's a great punctuation mark on this conversation. Really appreciate you guys taking the time to kind of share that venture perspective and specifically the unique Fulcrum perspective that you're bringing to the food and ag space, but specifically animal health as we've talked about today. So thank you guys.
Jeanette, thank you very much.
Thanks, Jeanette.